Assalamualaikum warahmatullahi wabarakatuh. Now that the VIPs have gone, we can have a real party, yeah? It's always a challenge to speak, but you know, I think, okay, let me preface by this presentation by asking the crowd, how many of you have bought cryptocurrencies before? Show of hands. Okay. How many of you have heard of the term initial coin offers or token generating events? Raise your hands. Okay, good. Let me preface the presentation by saying this, that I am going to focus really on introducing the concepts of ICOs as a very new and interesting way of raising funds. Okay, it has really captured the world by storm because right now there is a real efficient way of raising funds, and we will talk about how that works in a bit. Now, you can't talk about cryptocurrencies or tokens without talking about regulations. And because I am also a formal regulator and I work in the compliance space, I'm going to focus a lot about regulations on cryptocurrencies. And then really the debate is this, like most things in life, is it a good or a bad thing? And that's where we can have a discussion on this. Okay, it will be naive to say that cryptocurrencies are without risk. Yes, there are risky instruments. It's really developing into a new asset class. It's high risk and high gain, right? I mean, potentially. It's like asking, to some extent, it's like asking whether a Ferrari is a good or a bad thing, right? Put in the hands of a wrong driver, it will kill you very quickly. But use it properly, it will get you from point A to point B very fast, and in style too, right? So similarly, when you talk about ICOs, you get into those sort of discussions. Is it a good or a bad thing? I prefer to look at it in this way. Are there risks? And the answer is obviously risks. Yes, like most investment products, there are risks. Same for cryptocurrencies. But in this context, I think the world opinion, whilst divided, tends to move in a certain direction. Now, some of you might heard about the statements made when it comes to cryptocurrencies, statements made by Jamie Dimon, who was the CEO of JP Morgan in the US. He says that cryptocurrencies is a bad thing. It should go away. And then what happened? And then he got a very stiff rejoinder by two very prominent persons. One is Arthur Leavitt, who's the former US SEC chairman. And he is known for consumer protection. What did he say? He said that cryptocurrencies are here to stay because it has a big role to play when it comes to addressing some of the issues of weak monetary policies in some countries. And then we have got Christine Lagarde, who is the chief of the IMF. She joined the debate, and she says the same thing, that cryptocurrencies are here to stay. She says that it has a role to play in financial inclusion. She also repeated the point that in countries where you might have a crisis or some monetary policy that doesn't work, instead of just pegging your currency to another international currency, you can actually use cryptocurrencies as a way to provide some form of substitute for fiat currency. Fiat means real world or currencies like the US dollars or the Malaysian ringgit. So I'm just going to start with that, those two preface, and then I'm going to move on to my presentation. Okay, so what exactly is an ICO or a token generating event? I think we had a very good presentation early in the morning about cryptocurrencies, right? So cryptocurrencies is a way for you to pay using a virtual currency. And a virtual currency essentially is a set of mathematical formula. But what makes ICOs different is this. Now, some of these coins allow for smart contracts. I think you heard about smart contracts yesterday. So for instance, the Ethereum token allows you to write certain rules embedded within the coin itself. And ICOs is a way of essentially raising funds. Now, in the past, okay, let's take an analogy, for a real-world analogy. Most people are familiar with IPOs, right? Initial public offers. It's essentially, okay, typically you have a company that grows from a startup. You go for your, startup funding, seed funding, and then it grows. You get your Series A funding, and then the valuation becomes bigger. You might be Series B, Series C, pre-IPO, and then you go for an IPO. So now that process is heavily regulated. It takes a lot of time. There are places where you can, emerging companies can raise funds. But typically for a startup, it will take some time before you can raise significant amount of monies. Also for IPOs, what happens when you offer securities? There is a prospectus that's being required by, in Malaysia, it will be the SC. So the SC looks at the prospectus, it has to be registered there. It is very expensive. You have to hire teams of lawyers, teams of auditors, and then by the time you go public, you might raise X million dollars or X million ringgit, but you pay also millions of ringgit to your advisor fees. So it's a very long, convoluted process, heavily regulated. Good reasons for regulations, I would say, but I think when you look at the output as well, if you look at the prospectus, it might be a few hundred pages. How many people actually read prospectus? It's just very convoluted. Now, let's take a step back. For the cryptocurrency world, I think the previous presentation has sort of mentioned this as well. The cryptocurrency guys believe in the concept of democratization, decentralization, right? So rather than get the authority of one central bank to certify that the company is fine, you go through the community. So cryptocurrency guys believe in the power of the community. So every member in the community has a role in independently verifying a transaction. I'm simplifying this. Now, in the concept of an ICO, it's really about the power of the crowd. Now, if you have, so initially started like when you are a company, you're a startup, you might develop something that would be of benefit to the blockchain community. So the community then gathers around you and says, okay, that's a great idea. I'm going to support it. How do I support it? I give you money, I donate, right? Or I might say, I buy your tokens, and in return, the tokens give me certain rights. So that, in essence, is an ICO. Okay, let's simplify this further. Now, let's take an example. Let's say you invent a new watch, a fancy watch which is better than the Apple Watch or a new in-ear earphone. You go to Kickstarter, right? You say, I have a great product. This is how the product works. Please donate money. Or if you pay $100 US, you can get an early version of the product. Now, in some sense, an ICO is no different from that, right? You have a good idea. You go to the community, you raise funds. Okay, another example is this. You go to Starbucks, you buy a Starbucks card. It's a prepaid card, right? You pay 20, 50 ringgit, and you get drinks at discounted prices. So you're prepaying for services. So in some respects, an ICO is no different. But what's the difference? There is a difference. The difference is, first, you have a digital coin or token. That makes a difference. So instead of a Starbucks card, you have a digital key. The coin could be based on Ethereum or some other coins. So that's one difference. The other difference is this. When I get the coin, I can sell it to someone else. I can sell it to Umar Munshi, brother Umar Munshi over there. He can sell it to you. You can sell it to someone else. The blockchain captures everything on every transaction and creates a whole complete record that cannot be changed. You can't change anything that's on the blockchain. In theory, at least. We can talk about whether it's secure, but in theory, the blockchain allows a secure transaction. So effectively, you allow secondary trading of your coin or token. That makes it great. The other difference is this, from your Starbucks example. The other difference is that you can list the coin or on an exchange. Now, a cryptocurrency exchange allows you to change your coins or tokens into cash. Or you can go there, you can go to an exchange. There are exchanges here in Malaysia. Luno is one example. You can buy a Bitcoin, or you can buy any other coins. So typically for the ICOs, they will list their coins on an exchange where you can cash out. That allows some form of liquidity, because if you were to invest, or so-called invest in a company, or you buy a token, you can now either sell it to someone else, or you can cash out. And that makes it attractive. Why? Because otherwise, okay, let's take an example. If you were to invest in a private market, right, you might buy private shares, or you might be an angel investor somewhere, or you can go to a crowdfunding platform, or you could buy tokens. One of the challenges is that if you buy a security, there might be limited opportunities to liquidate that security, right? Because unless you set up an alternative marketplace to Bursa Malaysia, you find another investor to buy over your securities. So there is a difference in terms of liquidity and secondary trading. The other feature of ICO is, instead of a prospectus, there is a white paper. Okay, a white paper is essentially a document that tells you information about the company, the kind of business it wants to do, who are the founders, who are the team members, what is a proposition, what kind of rights you have as a token buyer. So, it's like going to the Starbucks example, how many drinks you can get, what kind of discounts you can get. So all that will be in the white paper. Right, so I think I mentioned all these points. Look, at any one point in time, if you have any questions, just feel free to stop and ask me questions. I like that interactivity rather than me talking all the time and having questions at the back. Okay, now what kind of rights does a coin or token give to investors? And here is how it's a little bit different than cryptocurrencies. Right? Cryptocurrencies essentially is a way of making payments for goods and services. So you go Bitcoin. I'm told, I read somewhere that there is a warung somewhere in Kelantan or Terengganu where you can buy your nasi kandar or your nasi dagang or whatever it is using Bitcoins. So it has become mainstream. But for an ICO, you can look at it similar to either a prepaid card or similar to some form, not quite a security, it can be a security, but you have rights as an investor, and that makes it different. Okay? You could have, for instance, rights similar to securities. So you could pretty much design a coin to say that if you buy a coin, you are deemed to hold certain ownership rights in a company. So that's similar to a security. You could design a coin to say that if you have the coin, you could have X% of revenue in the company. So that's pretty much similar to a security or some form of a payment or shared arrangements. It could be certain rights to goods. It could be certain rights to utility or services. You have the right to sell it to other people. You have a right to liquidate it or sell it or list it on an exchange and trade it through the exchange. Okay, so there are certain rights okay, investors might not be an appropriate word. It could be a token buyer. So if you buy a token, you have certain rights. Now, this chart is interesting. This has really swept the world by storm. If you look at this chart, this chart shows how ICO funding has surpassed VC funding globally, right, this year alone. And this is as of July. I bet you if you extrapolate the chart, it will go this way. So the light blue line shows VC funding globally, angel and seed funding, and the dark blue line shows ICO funding. Look where the chart is headed to. Well, in some respects, I think people would say that this is also a function of the whole euphoria about cryptocurrencies because Bitcoin prices have shot up to the roof, right? So there could be a way of spillover euphoria. And in truth, probably there are some coin offerings or ICO offerings which are not done right. There are probably scams out there. There are probably bad ICO offerings out there. But at the same time, I think there are good ICO offerings also. And like any investment products, it's a matter of the investor making those sort of decisions, whether I'm going into a good or a bad investment. But the key message is this, that it is very quickly growing as an alternative form of fundraising. Why? Because it is efficient. Those of you who have gone through VC funding or know startups that have gone through VC funding know how painful the process is. It's like pulling your teeth out, because, and there are good reasons for it, because the VCs come in, they're putting a lot of money with you, and their due diligence is very, very extensive. Sometimes they even go around and take a very active involvement in your business. So that depends on the VC's philosophy. But when it comes to ICOs, you are going direct to the market. In a sense, there's disintermediation because you are really going to people who believe in your cause. And there's actually an active community of people who look at opportunities to invest in cryptocurrencies. There are Telegram chats, because the VC community for some reason, they don't like WhatsApp because they don't think it's secure, or they don't like WeChat because the Chinese government looks at WeChat traffic. So a lot of them happen on Telegram. And typically what happens is that the the ICO issuer will have a chat with, let's say, thousands of people on a Telegram chat, and they will ask hard questions. So it's in a way, it's disintermediation, because you as an investor can have direct communication with the founders and ask very hard questions. And it's totally open to everybody. So that makes it interesting. Okay. Now, coming back to cryptocurrencies, just to explain the point of euphoria, right? Now, this is over the past 12 months, the returns. This is crazy, crazy returns. If you ask me, is it sustainable? I don't think it is. But if you had bought a Bitcoin 2 years ago, you'll be a millionaire, a US dollar millionaire now. And I think in some respects, some of the euphoria on ICOs have rode along the euphoria in cryptocurrencies. Now, this is real data. I know I'm not making this up. And you know what? It has spawned off a whole new industry, right? So if you look at the cryptocurrency world, there are people setting up cryptocurrency funds where they invest in either cryptocurrencies or they invest in ICOs. There are people who have services for neo-crypto millionaires. So, you know, there was this yacht show in Singapore. There's a guy who runs big fat shows for high net worth individuals. He had a big fat yacht shows, you know, Lamborghinis, classic cars. And the target audience was people who have made their millions from buying and selling cryptocurrencies. So it has spawned off very new industry. I'm not saying that ICOs should head in this direction, but it's just to understand some of the euphoria. You can argue whether it's a good or a bad thing. But let's take Bitcoin for instance, right? Actually 700% over the last 12 months is probably doesn't reflect how it has grown over the last couple of years. Just 1 month ago, it was at $6,000, one Bitcoin. 6,000 US dollars, now it's 7,000 US dollars. So in 1 month, you can make a big gain already. Okay, but let's look at Bitcoin. I think if you look at Bitcoin, it has, to some extent, gone mainstream. Apart from the warung that sells in Terengganu, there are stories where, and these are real stories, of Bitcoin being used to fund transactions. Visa has launched a card in conjunction with Monaco Coin that allows you to essentially fund your Visa card through a cryptocurrency, and then you can use it like a normal Visa card anywhere in the world. So it's really a case where I think we are seeing more and more acceptance of cryptocurrencies as a form of payment. So even when you come to ICOs, right, some of these ICO issuers would use the coins for a variety of purposes. So for instance, we're working with an ICO issuer in Singapore that runs an online fashion network. And they have got, you know, probably lots of people who are on the network. So they issue a coin to be used as a medium of exchange on their fashion network, right? And then there are also usage of the coins to be used for, let's say, trading energy or trading in commodities. So it's being used as a way of really doing real-world businesses. So that makes it very, very interesting if you look at the adoption of coins. Now, turning to regulations, and as a former regulator myself, I used to be at the Monetary Authority of Singapore. One of the issues by the regulators is how do I regulate this new offering of ICOs? Because, you know, there is a very rigid, prescribed framework, comprehensive for offering of securities. But then these guys are coming, they are raising lots of money. So for instance, there was an ICO in Singapore where the issuer raised 80 million US dollars in 7 minutes. And it was oversubscribed. Can you believe that? 80 million US dollars, that's about the size of an IPO in Singapore, or small IPO, bigger than some small IPOs in Singapore. But you know, in 7 minutes, they raised that kind of amount of money. So the regulators are a bit concerned. How do I regulate this? And I think it's important to know how they would think as a regulator. And you know, I bet you the Securities Commission is thinking very hard about how to regulate ICOs here in Malaysia. So this is how I think the regulators will look at it. Should I regulate it in the first place, right? Because you know, not every investment product should be regulated. And this is a point that was taken by the regulators in Singapore, because there are many things with an investment element. People in Asia buy houses not to live in it, but for investment. That's what even platforms like brother Omar's platform does. But not necessary, I mean, not everything that has an investment element should be regulated. You buy a classic car for investment purposes, you buy art for investment, but these are not regulated, right? So there is a dilemma for regulators. Should I regulate something that has an investment element in it? Next, another good reason for regulation is where there's information asymmetry. What does this mean? That means if, let's say you take the point of view of a company issuing shares or securities. There's an information asymmetry because you as the director or owner of the company knows a lot of information that the investor doesn't know. The investor will have to rely on your representations that you're going to make money in future, but does he know for a fact how your business is run? Not to the same detail as you would. So that's an information asymmetry. Typically, when there's information asymmetry, regulators tend to want to regulate that. Okay, so next point, consumer protection issues. Again, this is a consideration, but it doesn't determine whether something should be regulated. Sometimes consumers need regulation, but it doesn't mean that they should be regulated. So if you buy a product that turns out to be bad, you know, there's probably some regulation on product loss or mis-selling, but again, you need to decide whether you should regulate, especially because of the next point, moral hazard. What does this mean? That means there is a perception sometimes that when you regulate a product, you are deeming it to be safe for investors. And that's what regulators also are concerned about. The other point is self-regulation. Most regulators believe in the concept of market discipline or self-regulation, and you really want to test out whether self-regulation works or fails. And the last 2 points, regulations cannot front-run innovation. Again, when something is new, even when you take cryptocurrencies, most markets in the world do not regulate cryptocurrencies. Most don't. Only an exceptional few, 3 or 4 countries actually either ban it or regulate it, right? So it is the minority. And as a regulator, you're also worried because how would you regulate cryptocurrency? It's not easy. I mean, do you really understand the product to want to regulate it? Can you in fact regulate it? Because you can offer things on the internet. It's available to the whole world. I mean, how do you stop somebody here in Malaysia to buy a cryptocurrency that's being issued internationally or globally? It's hard, right? How do you actually monitor it? And what do you actually do? The next point is proportionality and materiality. This essentially the thinking is you only want to regulate it if it becomes material. So, okay, just in Parliament in Singapore 2 weeks ago, the Deputy Prime Minister said this. He said that we're not going to regulate cryptocurrencies because it is small. Only about 20 merchants in Singapore accept cryptocurrencies. So there's no materiality. So I'm not going to regulate it because it's not worth our time to regulate something like this. And also when you regulate it, you have a sense of proportionality. So you don't want to kill the entire industry. So for that reason, actually, regulators have sandboxes, right, to promote fintech, because if you were to apply, let's say, the whole rule book to a fintech startup, it's not going to work. So what do? You have a sandbox, you allow them to experiment, you allow them certain concessions or exemptions from regulations, so that's proportionality for you. So this essentially tells you how a regulator would think. Now when it comes to cryptocurrencies and ICOs, it's still very, very new, but it has caught on the world by storm, I think, and I think there's some urgency to decide how do you want to regulate it, if you want to regulate it. Now, if there are 2 takeaways from here, the first takeaway is this: cryptocurrencies are largely unregulated in most countries in the world, right? That's one takeaway. Now, the other takeaway is this: when you talk about ICOs, initial coin offerings or initial token offerings or token generating events, they are generally regulated only if securities are involved. In other words, if your right as a token buyer involves some form of securities-like rights, for instance, ownership like shares or some form of a payment like debentures or some form of profit-sharing arrangement. Now, so let's go around and to see how regulators have dealt with it. The SC, has given some form of investor alert a few months ago, where essentially it's more to, my reading of it is more to warn investors about the risks of ICOs rather than to give clarity on how they would regulate this. So it's a little bit different. So the approach by the SC is this. They say that, okay, be careful because firstly, the issuers might not be in Malaysia. It could be a company from some other parts of the world. And if you want to sue the company, it might be hard because it's cross-border. Next, anti-money laundering risk. Now, when you issue a token, typically the whole world will look at it and they will decide whether or not to buy your token. And the money laundering risk is this, because if somebody comes and buy your tokens and he turns out to be a criminal, he could be a drug lord, and that the tokens that the monies he used to buy your tokens are proceeds of crime. They are drug trafficking proceeds. Now, when you don't do any money laundering checks, you are risking yourself in conducting money laundering because you are exchanging his tokens. He might say, okay, I'll give you some Bitcoins. You exchange the Bitcoins for your coins. And if you facilitate that, you might be at risk of money laundering. So that's one risk. The SE also pointed out there's no secondary market, insufficient liquidity, although I think that point is probably a little bit overstated because most ICOs will list themselves on some exchange, so you can actually cash out. A structure of an ICO may limit investor recourse. And this is really a function of if the issuer is outside of Malaysia, then it's hard to sue the company if there's any false statements. So the SC said you should seek your own legal or professional advice and understand the risks or disclaimers in the white paper. Now, some of the white papers are done in a way that they disclaim all kinds of responsibilities. There's some white paper which says that I don't guarantee you that if I get the monies, I will apply it for the business. So you have to read what the white paper says, okay, to see whether they are responsibly done. Now, the approach in Singapore was that there's some clarity given by the Singapore regulators. So there's been statements that cryptocurrencies are largely unregulated because they're not prevalent. But at the same time, the Monetary Authority actually says there are AML and terrorist financing risks, so please address that. The approach in Singapore for ICOs is this: whether the coins or tokens are in fact securities. Now, if it's a security, it will be subject to the usual prospectus requirements, right? Unless there are certain exemptions. We'll talk about that in a bit. And if you issue a token, you have to do your own legal due diligence to ascertain whether the coins or tokens are securities. You can consult the MES whenever appropriate. You have to mitigate against AML risks. From a tax point of view, the tax authorities in Singapore gave some guidance that if you hold the tokens, you will not be subject. There are no capital gains tax, so that's fine. But if you were to trade often, you might be subject to some form of tax on income from trading. So it's a function of how frequent you trade in the coins or tokens. Now, essentially, this is a position in Singapore. So if your coins or tokens are equities, so in other words, they give you some rights similar to shares, some ownership rights, or they are bonds where the coins or tokens give you some rights to coupon, X% of coupon payments over a certain amount, although that's not Sharia compliant, but it could be a security. Or if it's a collective investment scheme, like a managed investment scheme or a mutual fund, it will also be a security. But if it's a utilities or goods, or it allows payments for goods or services, that's the green box, or not quite the box, the green words, it will not be regulated. So for instance, if say I have a platform that sells films, and this is a real life example, and let's say the coins or tokens allow you to say certain rights to watch the film. That would be a utility token, and it's not a security, and it's not regulated. So similar to your Starbucks card, right? So if Starbucks issues a coin or token to you, and you buy the coin or token to enjoy drinks, that's a utility token, You get some services for it. It is not regulated. So it's important, therefore, to understand what kind of rights you get from the coins or tokens. Now, in the middle is a revenue share, and that's a gray area, whether it's a security. A revenue share arrangement works like this. So for instance, if I issue a token and I say that if you as a token holder, you have a right to, let's say, 0.5% of future revenue on a monthly basis for the next 12 months. That's revenue share. So you have a right to future revenue. That is not clear under the Singapore laws whether that's going to be a securities. And I think the laws here are also similarly drafted. You will have those sort of issues here in Malaysia as well. Okay. Now, in the US, there's lots of ICOs that have taken place in the US. The US SEC actually has taken enforcement action against some of these ICOs because they involve securities. The thing about the US is some of these concepts are similar to us. Stocks, notes, debentures are securities, but they also have got concepts of evidence of corporate indebtedness or investment contracts. And the law in the US, there is a very famous case called the SEC versus Howey, where the court essentially provides certain guidance on whether something is a security. For instance, there's investment of money. It involves a common enterprise. There's some expectation of profits from the activity of or the entrepreneurial efforts of someone. So it's actually quite a broad definition of securities. I think definitely a lot broader than what I see in this part of the world. Definitely broader than the definition in Malaysia or Singapore or Hong Kong or Australia. But the general rule, if it looks or smells like securities, it will be deemed to be a securities. Okay? Which is why for a lot of the ICO issuers, they don't allow the US citizens to participate in it because under US laws, the test is quite different. Okay, Hong Kong has also given some clarity. The Hong Kong SFC, again, took a similar approach that whether the coins or security or tokens are in fact securities. And there is a positive list of securities in Hong Kong, involves shares, debentures, collective investment schemes. The Hong Kong SFC reiterated that cryptocurrencies or virtual commodity is still unregulated. And they expect issuers to conduct their own due diligence and address money laundering risks. So it's a similar approach to Singapore's regulator. The Thai SEC, I think Thais are very polite people. So they said, oh, it's a good thing we acknowledge the benefit or the value that ICOs would bring to Thailand. But if it's a security, again, you're subject to regulations. And the Thai SEC actually said this, they need to balance innovation with investor protection. And I think that's a very good message. Because if you think about this, there is value to what ICOs can bring. It's a very efficient way of raising funds for startups, right? And if you believe in the power of the market, why not leave it to the market to decide? You know, if they think that they want to help somebody raising funds, why not allow them to do that? Because, you know, let them decide. If it turns out to be a bad investment, then so be it, because then they come in with their eyes open. So that's the thinking about some of the benefits of ICOs. And then the Thai SEC says, I welcome suggestions from the private sector, give me your inputs, let's learn from you guys. But they also points out to some risk factors that investors should think about. Volatility, it is volatile, yes. Cyber security issues, because people can hack. Fraud, limited recourse to investor protection. So fundamentally what they're saying is this, you know, if you want to invest in ICOs, you know, do so with your eyes open because there are higher risks, but potentially it could be a higher set of returns as well. So that's fine. In Australia, the Australian Securities and Investments Commission, ASIC, says that, again, similar, if it's securities, depending on the structure of the ICO, it might be regulated and subject to prospectus requirements. They say that even if you issue a coin or token that's not regulated, there are some laws about false or misleading conduct. So similarly, here in Malaysia, if somebody were to issue an ICO, even if it's not a security, but it turns out to be a fraud, you can actually file a complaint for a cheating offense. Or there are other offenses of fraud or misleading, and you can sue them for any misrepresentation. Okay? Now, let's look at the scenario where, let's say the coins or tokens are in fact securities, and then so what? So this is a so what slide. The upshot is this: even if it's a securities, you can still do an ICO, you can still issue it, but you are subject to prospectus requirements. Now, for a prospectus requirements, there are mandatory information that you need to put in there. It's quite an inefficient and expensive process because you need to hire lawyers to do due diligence where they will review every contract. The accountants come in, they look at your numbers, they scrutinize your historical figures, they scrutinize your projections, whether there's reasonable basis. And sometimes, in some countries, the professional advisors can be liable, whether it's civilly liable or the statute could say they could be criminally liable if they know of a misleading statement and they allow it to happen. So that makes it's a whole strict regime where the advisors know of their potential liabilities, the issuers know of their potential liabilities. There'll be an investment banker who will also be doing the number crunching, and guess what? They're also potentially liable. So there are good reasons for having all these rules for prospectuses, right? But the thing is, I think it has become quite onerous and an expensive process. Now, there are exemptions, however, in most countries from prospectus requirements. So for instance, if you issue a small offer, in Singapore, the limit is 5 million Singapore dollars. So you issue even shares less than $5 million, you can do it without a prospectus. There is a small offer exemption. The other exemption typically is where you offer it to private placements, meaning that even if you raise a big amount of money, but I offer it to less than 50 people, 50 seems to be the magic number for a lot of countries, is generally exempted from prospectus requirements because you're not going to the public. You are limiting it to a small group of people. The other exemption typically is when you offer to institutional or accredited investors. These are rich people. So accredited investors could have to pass a certain net asset test. So if you are rich, the thinking is then it's okay if you lose money because you have enough money to lose and you are able to take care of yourself. It's a bit of a fiction, but most countries have this concept. They call it, whether it's accredited investors or sophisticated investors, you can issue it to them and you don't need a prospectus. Okay, now if it's a securities, then the other implication is that if you're a market or platform that trades securities, you need to be licensed. So remember I spoke about cryptocurrency exchange. If the exchange deals with tokens which are securities, they need to be licensed. In Malaysia, they'll need to be a recognized market operator recognized by the SC. Or if you are brokering or you are dealing in coins or tokens which are securities, you need a capital markets license, essentially. But you can still do an ICO if you think you want to do a prospectus, although it's very expensive, or if you rely on any of these exemptions, you can still do an ICO even if you're offering a securities. Now, if you're not offering a securities, the position in most countries is that they are largely unregulated. You can do it, perfectly legal. There are AML or KYC risks involved, and they should be mitigated. Because the example I mentioned that if you issue a token, somebody comes in and put ringgit 1 million with you, he turns out to be a drug lord or drug trafficker, then you are at risk of laundering. Because remember that for money laundering, even if you receive the monies and you convert it from one form to the other, say you convert it from Bitcoin, you issue your own coins to him, that's money laundering, and you are committing money laundering as a primary offender. Okay, so that is a big risk for you. So we would always suggest for ICO issuers that you put in place some form of screenings. So you can put the names, first you need information, things like the names of the persons, the passport numbers, his address. You might ask for documentation like a utilities bill to show that he has in fact lived in a particular place, or you might ask for his picture to verify he's in fact the person. So I might ask the person to take a selfie, and he holds a copy of his passport. he takes a selfie and he could write there that, okay, this is for the purposes of this particular ICO, just to make sure that it's not a fraudulent person. I think there's also a realization, even if it's not regulated, that a good ICO issuer would make proper disclosures to address information asymmetry. And if you're an exchange, you deal with coins or tokens which are not securities, generally in most countries, you are not required to be regulated, okay? Now, what if you want to invest in ICOs? What are the questions you should ask an investor? These are some questions. And I think some of you might even think about investing in ICOs, right? And that's perfectly fine. I think some of the questions you should ask is whether they involve securities, whether a legal review has been done to determine whether they are in fact securities. So typically, an ICO issuer will get a legal opinion, and the opinion will say these are not securities. And it goes back to your risk appetite. It's a higher risk product, yes, higher return. And if you think about this, there are conventional financial products out there which are very risky. Even if you buy a property, it could be inherently risky because the developer could go bust and the project could be totally gone, and he could be using up all the money and you could be left with nothing. So there are high risks. I mean, and this is my response to a lot of people who say that ICOs are bad things because they are very volatile and risky. The same can be said of any other conventional financial product, especially if it involves a foreign issuer. There's volatility in other products. There's a risk of money laundering in a lot of conventional products, even for cash, right? I mean, cash is the easiest form of money laundering. The thing about money laundering on cryptocurrencies is this. There are people, and I once attended a seminar, and the speaker before me, who's a lawyer, said, oh, cryptocurrencies is just for laundering. But it shows he didn't understand the product, because you must be a complete idiot to want to launder monies by buying Bitcoins. Why? Because there is a complete audit trail on the blockchain. It's very easy to recreate the entire transaction flows, whether it's a coin or a cryptocurrency, and it will eventually go back to you. You can't run away from it because the blockchain captures all transactions on record. So you must be a real fool to want to launder monies on using cryptocurrencies, right? So that's the typical response. Now, coming back to what you should look out for as an investor, look at the white paper. So the white paper should be a properly drafted white paper, disclosing properly who are the promoters. Do you know these people? Are they real people? What are their track records? Have they done something similar, projects similar to what they are issuing right now? The financial projections, the basis or the assumptions, essentially things that would matter to you as an investor. What is the value of the coins or tokens? And also asking questions like how many coins or tokens you are issuing, whether there's going to be a continued supply of these coins or tokens. So a good white paper will say that, okay, I might issue, let's say 100,000 coins now. I might issue another 50,000 or another 100,000 in 6 or 12 months' time. But you need to know all these as an investor because that determines, going back to the basics of demand and supply, whether the coins are going to be in demand or not. Actually, if you read some of the commentaries on coin issuers, if you're issuing a coin, you're really doing a little, monetary policy role, because you're determining how many coins you should issue, and you need to disclose all these to your investors. And then questions like, do they have a physical presence in Malaysia, or whether these are people who just use Malaysia as a platform to raise funds. There are certain risks involved when they don't have a physical presence here. And then you should also ask whether the coins or tokens conduct, or the issuers conduct AML checks, because if they don't ask some questions from you, then the whole offering becomes a higher risk offering, because you don't know if your other fellow investors are criminals, and it could taint the entire pot, and you will be at risk. Typically, the ICO issuers also have got advisors, so this should be good people. So the quality of the advisors also help in determining whether it's a good ICO or not. Okay.